following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to a very special episode of the Power Trading Hour with me, your humble, lovable, squeezably soft host. As always, we come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
Pretty much every trading day, off 61 points on the S&P cash, 3.5 billion shares on the New York Consolidated Tape. So we're pretty good. For 60 points down, I thought we probably should have something like 5.5 billion shares at the end of the day. We'll have to see how that occurs. Probably should have some decent volume going into the close. Of course, the biggest move in the dollar since 1978. We will also have the largest Russell rebalancing on all their funds at the close today. So we've got a bunch of things going. 2050 on the S&P cash is kind of the bottom of this trading range. We are hanging on just above it. I'm thinking that maybe we close somewhere around 2070. I'm thinking that's kind of a way that I'm looking at a lot of these stocks setting up, unless a lot of people decide to dive on a grenade going into the weekend. My guess is they're going to be sitting on some pretty fat, big profits, and they're going to start kind of winking, kind of inkling, kind of buying as we go into the close. And of course, that'll make more people close their positions, and we could, 20 points up from here, not a big deal. The volume has been very light below 2050 on the S&P cash. So at least the first time down to 2045, I did not see anything that said really that they wanted to blow this out by the end of the day. And as I said, right now, what are we going into next week? We're going into fund buying. So my guess is that even if you thought that we are headed lower, my guess is that we may be going higher for just a little while. I can't be horribly bearish out here, mostly because I've got some long-term positions, and guess what? They're not doing bad. In fact, still higher than they opened on Wednesday. So it's very tough for me to get all whacked out. I know a lot of people trade the actual indexes for the S&P and the NASDAQ. As I've told you for the last 2 weeks, I have not. I've stayed away and tended to my knitting, played individual stocks where I thought I had a much better chance, and actually buying out of the money calls for the close today. And we'll see, but I'm thinking we're pretty close. I think I'm pretty close on a couple out here that may be 5-for-1s if we just get a tiny bit of buying into the close. I certainly like the risk reward. I'm not putting out a whole lot of money. But if we got 2070, 2075, you might not see me till the end of the summer. There is a lot of money to be made on just slightly higher prices going in today. They have washed out all the premium in the out-of-money calls, and I'm just sitting there knocking on the door of being in the money on a few of them, and actually put one in the newsletter. I think it's doing pretty good. I think I can. But I always love it when I can lose a little and make an awful lot, and actually a small ton of stocks. But I do digress. It is time that we get started and kick off this show.
Then it's all just a little bit of history repeating.
On this day in 1971, an entrepreneur named Fred Smith founds a company to compete with the U.S. Postal Service. How could you ever do that? His goal is to deliver packages overnight. Ha 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 ha. I'm the postman. I will throw it over in the corner and deliver it when I feel like it by routing everything, no matter where it originated, through Memphis and probably right through Elvis's home. The idea is so daffy that one of the Smith's business school professors almost flunked him for proposing it. Smith calls his new outfit Federal Express, and before long, a new verb, to FedEx, has entered the language, along with other things like Kleenex and other things. On this day in 1971, they called him mad. They called him insane. Now, of course, when it positively, absolutely has to be there, it's Federal Express. Of course, we can say we have yet another country that will be celebrating its Independence Day. That is the UK. I had to laugh last night because we were all trading in the den, and somebody came on, and unless you've ever been over in the UK and wandered about and ever actually stumbled in to the people over there that speak the Welsh language, you have not lived. If you're watching on Tiger TV, this is a picture of a town I went through. And yes, that is the real name of that town. People that live there can pronounce it. I don't know many people that cannot. But yes, they talk gibberish beyond compare, but it's actually a real language. Just not very useful for anything. I think by the time you told the person where to go to when you had an accident on 911, after all those syllables, you'd already be dead. But yeah, very interesting. Anyway, I congratulate the people of the greater United Kingdom, a place of 4 major countries, semi-separated. But one thing they have in common is they voted to leave the EU, a proper decision in my thought, and that is because, of course, they are treated worse than a redheaded stepchild by the EU. Out of 72 appeals for them that they've sent to the EU, they won absolutely 0 of them. They were looked at nothing but as a giant piggy bank, and if they didn't want to do what Brussels and by the extension, the Germans actually wanted them to do, they were called racists, homophobes, bigots. And one of the reasons why I was pretty sure that the polling didn't have a lot to do with reality, that when we saw the actual vote and no one could see people and they couldn't be called horrible names because they had a slightly different opinion than anybody else wanted them to have in the big cities, that it might be a little different. Of course, it was very close. I couldn't go out there and throw myself on a grenade going into that unless I was sitting right in front of a computer like many of us were in the Tiger's Den last night. Now, you can make a lot of money that way, but of course, you've got to have some experience in that. We cut our teeth here, or at least I cut my teeth in trading in 2000. And a lot of people look at last night thinking, wow, that was a big deal. Just imagine an entire year of that with the .coms, because that's how they traded all day, every day, just about. It was $190 in the morning, it's $80 in the afternoon. It's $80 in the afternoon, it's $250 in the afternoon. Well, anyway, the .com days. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Well, if you were like me, you lived through it last night. But if not, you probably woke up and thought, you know what? What's going on here? It's just so weird. You probably heard something like this when you walked or turned on the TV this morning, that the sky was falling.
What he means is Old Testament, real wrath of God type stuff.
Exactly.
Fire and brimstone coming down from the skies, rivers and seas boiling.
40 years of darkness, earthquakes, volcanoes, the dead rising from the grave.
Human sacrifice, dogs and cats living together, mass hysteria.
Well, I can't say that I have a feeling that any of that stuff is coming true, at least in the United States. Disruption is never good for a market, but I can't imagine that all that money and turmoil over in Europe is not going to find its way here. Now, maybe it didn't find its way here today, but I could see that we could find a bunch of people who are looking for any place to find return on their cash, and that cash finding its way to our shores. Of course, there were so many reasons why the people actually voted to leave. Most of it was the incredible corruption, and basically anytime you just say, you know, I'm a MP, I represent you, but you know what? I can't do a damn thing because whatever I do, they just override me in Brussels, and that doesn't matter. So I can talk to you and act nice, but that's about it. I have no real power. And they kind of gave that up. But it was kind of a way to take them down the road of socialism. And I always love that Winston Churchill quote. It is, socialism is the philosophy of failure, the creed of ignorance, the gospel of envy. It is the inherent virtue, or its inherent virtue, is the equal sharing of misery. Well, more people were in misery than were on the dole from Brussels, and it was the end of that. We did talk a great deal this week, or not a great deal, but some. I had probably 20 or 25 people email me about my paper on the three-gap play. And I said basically Deutsche Bank was setting up rather beautifully in this one. I don't short as a matter of policy a stocks under 30 bucks. But I did say, man, if you're looking for this kind of pattern, this is it. If you want or forgot to email me at path@tfnn.com, and I'll send you the white paper I have on 3-gap plays. But this is it. Yes, there are currency gaps, but my software is pretty good at moving and getting out of just currency gaps. This is actually looking at real huge changes. And this is kind of the way it plays out. I remember talking to John in the den one time about, was it Chipotle? Maybe it was Tesla. Chipotle. Anyway, it had 2 monster gaps. And I said, you know what? The worst thing this thing could do is have one more gap up. There's some rules to these. They do not happen all the time. Probably the worst thing that I can do as a technical analyst and a host here is tell you that these things are always out there, that you can play all these and make money. They seldom occur correctly to generate the pattern. But when they do tend to work like this. And the other part of the answer is they do this, they give up all the gains in one day, and that is the exhaustion move. If you were playing this for Deutsche Bank, you wouldn't play this in a 3-gap play. It's just over, it's done, you take your cash, and you run. So if anybody did take that play that we talked about, that's it. You know, there may be a ton of cash out here or a ton of volume in this, but for the most part, what you want to do when this thing fills all 3 gaps that it just came up, normally that's it. It just either goes sideways or starts a new ABC up or something else. This is one of these things where it gets everybody hot and bothered. It basically destroys all of them in 1 day or 2 days. But that's it, the 3-gap play. Email me at path@tfnn.com. You can also call me at 877-927-6648. Let's get to some charts here and get them rolling and start seeing what's happened. In fact, let's take a little longer look out here at Deutsche Bank. Monster volume, and of course, you would think that if really the end of the world was coming for Deutsche Bank, it would have blown through the $14 level. I think in pre-market trading, the thing had ticked down as low as 12. But it can't even get as low as it did June 16th. To me, these are some kind of washout patterns. Am I expecting this thing to run right back up to 17 bucks? The answer is no. But at the same time, am I expecting the $14 range to probably be broken? And the answer is no also. Man, I had a list. Maybe I can find it here of other things, of other stocks. Most of these stocks that are moving. Yeah, let me find a better one here. I think I can, if I can get back up here. There's my portfolios. Let me find it. Okay, then we go here, and I go to, no, I didn't want to go to that. I wanted to go to Movers 1. There I am, where I have all the list of stuff moving today. We'll take a look at the worst offenders out here in the marketplace and go from there. RBS, of course, is the worst. Down 23% today. Again, this one basically had its 3-gap play with a little doji up here. Yesterday, it's come back and filled everything. Again, if you were short any of these, I don't short $7 stocks. It doesn't matter. This came down with all this volume. This 3-gap play pattern does have a tendency to say, guess what? I'm going to do something else for a while other than just blow up again on Monday. So, you know, some of these stocks, will you think they're going to go lower? Yes, but I've voiced this opinion before, and that is the 3 bears. It's too hot, it's too cold, it's just right. Monster volume, like 16 million shares into 1 million shares, probably says the stock's going lower over time. What it also tells me is that anybody that was in this stock was scared out. There's nobody left that has a pulse and can click a mouse that wants to sell this thing on Monday. Now, maybe some people will be forced to, but for the most part, you probably have an exhaustion move in this stock. Maybe it goes sideways for 2 weeks and then blows up and goes down to $3. But in the short term, if you were short these things, probably the best thing to take your cash and run. To do what else does we have out here? Any questions in the den? We've got a couple in the email, so we'll try to continue on upwards and onwards, Junior Birdman. Looks like we're fading out a little bit. 66 points, 3.7 billion shares. So we'll take a look at that when we come back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. Max, how you doing today from Fort Lauderdale?
Hey, good afternoon, Dave. You see any target areas on the British pound for a bottom?
You know, I'm not a big Forex trader, so I will say that maybe some of our other hosts might have a better view on that. But I think you're probably pretty close. A lot of people were saying 20 or 30 and 40% down if they left. And what is it? I don't have it up. I've got another computer that's got all my trading stuff on it, but what is it down? 10%?
Right now it's 137.
Yeah, but it's down. What's the percentage on it?
I don't
It's
know.
like, yeah, I think it's like 10% or something. So, yeah, I just don't see the countries that aren't in the EU, the currencies are doing pretty good. There's probably not a better currency to have over in Europe right now than the Swiss, and they're no part of the EU. So it's going to take 2 years for them to leave. But I think that they're. You want to buy it, or what are you thinking?
Yeah,
You want to go long?
I'd like to go long, yes.
I don't think that's a bad deal. I do think, though, that it's probably going to be a little while. I would let the dust settle. I'm not a big fan of jumping in on this. There's just too many emotions running wild.
I just thought you might be something on your chart as far as the support area goes.
No, for that stuff, I have it on yet another computer that I don't have with all the chat rooms and stuff. I keep it pristine. I have almost all the other stuff on this one, but that on my trading computer that has all the Forex stuff on it. But even then, I don't spend a lot of time doing Forex trades. I watch the dollar index a great deal.
Okay.
But to me, I can say that probably having a lower dollar is going to do a lot for them in the near future. I kind of like the idea that they're going to crush this thing, and there will be a buy down there, and I think it will probably be a decent buy. So are you talking about just a short-term trade or a long-term?
No, it'd be a long term.
You know, I kind of like the idea of it. I may look at it tonight or over the weekend. But I think that there's a lot more to that and some of the people that leave early opposed to the people that stay way too late to the party as the EU slowly dissolves. They'll be out. They've already got their currency. They got it straight. And there are 6 countries that actually poll higher on leaving than actually Britain itself or the UK. So as those guys exit and actually have to come up with a currency, I think a lot more people are going to look at the long term, look at the pound as the place that they want to be if it's not the dollar. So I like that long term idea. I just think that it's probably a very long term play, and I wouldn't get too excited just yet of trying to pick a bottom on it. I would let the dust settle a little bit and then start picking up on it. I'm thinking maybe about Wednesday we might start getting some real clues. I don't know if there's a whole lot to be seen just yet. Okay?
Thank you. Have a nice weekend.
You bet. You too. Everybody have a great weekend also, although I'm not leaving just yet. Had a question in the den if we're going to see a bottom in VRX. Do kind of like it. Market's not going my way on my out-of-the-money calls. I'll lose 20 cents on my call, but I kind of like it. There's some other things going that I do like, so we'll watch those. Valiant. You know what? The thing I dislike on Valiant was the energy on the way down, the gap down. Do like the fact that there isn't a whole lot out here in this yet. I would probably think, though, that you're going to have a move back up at about this 25.50 level, which is the base of this gap. Normally, these patterns are coming up on there. I like the candle today. I like the light volume. I like a lot of things. I like the fact that they couldn't really just totally destroy this thing on one of the worst days in the market. We'll see how this thing closes. But you know what? With a very tight stop, I wouldn't think that this may do very badly back up to $25, which is not a bad trading range. What is that, 25% on that? So that could be kind of interesting. We will look at some other stocks here. Go back and see how some of the stocks that were working. Wanted to see how ARMS Holdings were doing as far as a technical play. ARMS Holdings, of course, the people that designed the chips for Apple and the rest of these folks. Just how bad could it be? They are a British-based company, so I wanted to see what this was like. Huge volume out here, but in the scheme of things, I'm not thinking I'm jumping out any windows circa 1929 because of the movement in ARMS Holdings today. Apple, I did see down. Let's take a quick look at it because it's probably tied to it the most. It's down. Volume is not all that exciting. You're pretty much going to where support should be on Apple, which is about 91.50. But you've got a little hammer out here. I would not be surprised to see that we've got at least next week's low in Apple already happening today. This thing kind of meanders between 92 and 95, 96, the upper 95s out here. Not a lot of energy, and again, not a lot of volume yet today. So there are some stocks with some heavy volume. There are some not. One of the things that you can say, though, is with higher interest rates and a higher dollar, there's nothing like companies that have 65% margins. Why Apple's margins probably starting to shrink? Guess what? 65% margins turn into 63% margins are much better than 6% margins that turn into 5% margins. Stocks still will come back, but probably hold up a little bit better. I can see probably some people thinking about nibbling next week. I'm not predicting this thing going back up to its high, but I can say that I think maybe we've got a trading range. We've got fund buying that starts really picking up on Tuesday. Very light week, a little bit of earnings, but nothing to really shake it out. And what I think could be very much a exhaustion move in this market by the close today. So I think there's a lot of stuff going on where we can make some fairly decent money before the end of next week, and especially stocks that maybe a lot of people have hopped on far too heavily on the short side can have some wicked reactions when the short squeeze starts. So I'll be looking at a great deal of those come this weekend. What else do we have going on? Oh, I wanted to look at some other stocks very quick, some that had been topping out and some topping patterns. I said I kind of like Windstream's holdings out here just because it had tested the previous high on a lighter volume. The energy up on this last leg from the low was May 19th. It's pretty much done it. But again, a lot of these stocks that I'm looking at here are not giving me a lot of volume. A lot of volume in the indexes, not a lot of volume in a lot of individual stocks. We'll be back after this break.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally weighted performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
I'll have to see my broker, find out what he can do, 'cause I'm in the market for you. There won't be any joker, with margin I'm all through, 'cause I want you outright, it's true. You're going up, up, up in my estimation. I want 1,000 shares of your caresses too. We'll count the hugs and kisses when dividends are due, 'cause I'm in the market for you.
Okay, I had to take care of a couple of things there during an extended break, but I am in the market for you. Give me a call, 877-927-6648. Email me at path@tfnn.com. And, of course, you can always put a message in the den. See, I got a couple more emails. Question on Microsoft and how it's moving today. Nice little gap. As I said, I kind of thought this thing is kind of bouncing around between this $53 high, which is the May 31st high, and this $49 low. Volume did pick up a little bit. It's made a little bit of a candle out here that could signal that this 49.50 area is kind of where buyers are coming back in. We're going into fund buying. This seems to be kind of a safe stock that you can park some money in. I think it will do okay next week. It's the week after that, probably next Friday, in where you really need to worry about it. It's not a stock that I play because it goes from 50 to 52. I do not care, but it is kind of a nice setup. Thanks, Ron. Nutrisystems. Not a bad looking chart out here for Nutrisystems. I dislike the time frame for this. We've been talking about it all week, but this is exactly the kind of Wyckoff pattern you want to buy in a market that tends to be a little bit more friendly than today's. But exactly what you're looking for. Decent gap higher. You're doing it with a decent candle and a volume. You come back into it with incredibly light volume. There's probably a little bit more to do with how the market does the next few days. But there are some stocks out here that offer some fairly decent risk reward, even if we're just going to bounce for a couple of days. That is one of them that I'm kind of keeping an eye on. Others out here, I wanted to see some volume come in SLM. We've talked about this one. It does not have volume. Again, a lot of these stocks I'm looking at, no volume at these lows. So I'm wondering what's going on. A lot of volume in the indexes, not so much volume in the individual stocks. May 20th, 7.2 million shares. So you wanted to see 7 million shares today. If you're thinking lower prices, 3.3 million shares. Actually 3.2 so far. So maybe a little bit more volume than the 3.5 yesterday. but not so bad. Energy a little bit less coming off this June 8th high. So there are some things to see. You don't have to move along. To do, what else did I have? Oh, wanted to go to some of the other stocks. We talked about Federal Express. Let's take a look at American Express and see how these American stocks doing. As I've said, I want to see some volume as these things are blowing out lows, and I do not have them. Maybe we are getting some kind of exhaustion move out here. Certainly with the volume, I wanted to see 12 million shares today on American Express. There's no reason why we can be pushing 4 billion shares on the New York Stock Exchange and not see 12 million shares on American Express out here. You know, gap down, did so. Energy's a little bit more than yesterday. Are these horrifically bearish charts? No. Are they bullish charts? Maybe not. But certainly you want to see these stocks break the lows with extended volume, and I am not seeing it. Others in my list of things out here, let's take a look at MasterCard real quick. Maybe we got some volume in MasterCard. Well, a little bit more, but this one, oh, actually, what is that? MA, sorry. Down with some volume. Yeah, let's see if you can see. You want probably 5 or 6 million shares. You're at about 5 million shares. I don't see a great deal on that. Let's take a quick look at Visa. Maybe it will have a better way to look at here. Okay, now you did gap down with Visa, and it does have a volume, opposed to many that do not. 11 million shares already, going up against 8.8 on the 18th of May. So you do have a confirmed break of the low on higher volume out here. What else do we have? Visa. Let's take a look at Wells Fargo. WFC. Now, this is actually kind of interesting. The biggest bank in the United States and also one of the most profitable, back down to this high gap up that had 28.5 million shares. Well, we broke that with a little higher volume, but doesn't look like it's going to blow itself to pieces just yet. So that maybe tells you that there is a low coming in this. Maybe it bounces a little and then comes back down into this gap with lighter volume. You've got higher volume today. Figure the thing comes in with 38 million shares. That's probably enough. But you'd have to see a lot more out here to make me think there's something else going on. Let's take a look at the Goldman Sachs real quick. This one's back down. Needed 10 million shares in the Goldman Sachs to blow through this low of February 11th that had 10 million shares. We got 5.7 million shares. So be very interested to watch how this comes in to the 139.05 level from February 11th. So you want to be kind of basically looking at that one. Let's take a look at Citigroup out here. This one's going into the low of April 7th, 22 million shares. It has 53 million shares, but it needs to close below 39.95 today. So that's another one to key off of and watch in the last few minutes. We'll look at the Morgan Stanley real quick and see how it's going after it. It gapped down 36 million shares. It's not blowing out its low yet. 24.23 is what it needs to close above. Certainly a ton of volume, but not the break of the low yet in that candle. So you want to take a gander at that one. What else do we have out here? KeyCorp, Goldman Sachs, HSBC, Credit Suisse. Talked about most of these out here, and Visa. Let's take a look at some of the other ones that I had on my list out here. Probably the most interesting to me, of course, was that ARMS Holdings. Wanted to see how in tech a British-based company was doing. Doesn't seem to have that much effect, which is kind of interesting. We talked about fibrocellulose. Wanted to see how this one was doing. This one did finally break with a volume. today, 2.8 million shares against the 2.2 million shares of April 11th. So you do have a confirmed one on that with a little bit more volume. We'll look at ABCO when we come back out here. Not much movement in that one, is there? Maybe ACCO. We'll be back in a minute.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And I had a couple of questions. What am I doing? Well, I added to I wanted to buy a stock in my long-term newsletter, the Tech Insider, and I'm going to do so at the close today. I think that there's a lot going on out here, so I am fairly jazzed about what's going on. To me, this looks like an exhaustion move, and I think that there is some opportunities out here. I will put in my stop and hope for the best, but the charts look good. There is a wonderful passage in Reminiscence of a Stock Operator where Jesse Livermore is talking to a bunch of people. Before chat rooms, people actually sat and talked to each other person to person, if you can believe that. But when dinosaurs ruled the earth and that kind of stuff, people actually sat in actual trading rooms and talked to each other during the 6.5 hours of the trading day. and probably developed a lot of bad habits and some good. But one of the things that Jesse Livermore passed on was a lot of these guys that were talking about how much money they made. And one gentleman in front of him, not him directly, got in an argument with another guy about imaginary trades. But he was saying, you know, it's very easy to talk about things. It's very different. And they told this story. Do I have enough time for it? I think I do. But it is, especially on a day like today, it is very apropos. And that is that two gentlemen are talking, and one gentleman says, you know what? I can snap a wine glass. I can shoot a wine glass and bust the stem at 20 paces. And the other gentleman said, well, that's wonderful. But if the wine glass is shooting back, how well do you do? And that is the real thing. When it is about as ugly as it can get, can you go back in there and pull the trigger when everything looks like it's the darkest? And that is it. Was it on Tuesday that, or last week? It was last week, wasn't it? That Andy Heck had his guest on, Mr. Good to Be Seen from CNBC. But he had 10 rules of trading. I was trying to get Andy to actually, that is a Twitter. Probably true. Probably true. There'll be a time for Twitter. In fact, we'll look at it before the end of the day. But he said probably the trades, TWTR, the trades that are the absolute hardest to do are the best. Well, there's nothing in this. This wouldn't come up into its gap. It's not even pulling back on anything. That the trades that are actually the hardest to pull the trigger on and the hardest to hold are generally the best. If I'm sitting there pounding the table on anything, if I'm saying that natural gas has got to go higher, and I'm screaming and yelling and anything else, normally those trades kind of go against me. It's those trades that are hard to do, the ones that make me nervous, the ones that keep me up at night. And I guess that's probably the way it is. If it was easy, everybody would do it. If it's tough, if you have to snap a wine glass stem while someone is actually shooting back at you, those are the trades that truly matter. I know you're all going to have a great and wonderful weekend as we head off. Tom O'Brien is in the next hour. He will give you his wrap-up of the week. And I'm going to look at a variety of things. We've got the biggest Russell rebalancing at ever at the close. Look for volume, look for volatility. See you Monday. Same bat channel, same bat time. So when you can, not when you have to.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.